Up next, we're going to be speaking about securing growth capital, demonstrating milestones, and reducing risk to attract institutional investment for decarbonization projects. So I would love to welcome the speakers of this session. First, we have Christian Patino, Head of Impact Tech at UBS. Next, we have Rajesh Swaminathan, Partner at Khosla Ventures. Next, we have Andreas Aepli, CFO of Climeworks. Next, we have Jan de Dreu, Executive Director, Debt Investments at BBVA Spark. And our wonderful moderator for this session, Ashwin Shashindranath, Partner at Energy Impact Partners. Have a great talk, gentlemen. Thank you.
Awesome. Good?
Good.
Okay, so we're going to try something different, and we're going to go fast in this one. We know we're between you and the lunch break, so we'll see how fast this can go. So I'm going to do the quick intros of the panelists, and then we'll leave some time in the end for questions, but hopefully we'll be able to cover a lot of topics. So first is Andreas Aepli. He's a CFO at Climeworks, biggest DAC company in the world. Claim to fame, fun fact, is I think he's raised over $1 billion in debt and equity, so pretty large number here. And then we have Christian Patino, who is an exec director at UBS, heads the Impact Tech investment team, and has been in London for the last 7 years, and has finally decided to ditch his US citizenship for London and for UK. And then we have Jan de Dreu, who is in Spain and leads BBVA's venture debt program, so has been investing for the last almost 15 years. So excited to hear about from him on how he's thinking about venture debt and how that can be supporting climate tech companies. And then my close friend Rajesh at Khosla Ventures, also a 20-year investor in this space. Fun fact is that he grew up in the same city as I did. He claims his high school is better than mine, but I'm the one asking questions today. So we'll see how that goes. So just quickly, guys, so we're going to do a few just voting questions, and I came up with this makeshift yes-no question paper, so we'll see how they do. Just some quick questions on securing growth capital, which is the topic that we're going to be talking about today. Okay, first one, should private sector investments in climate tech be subsidized by the government for quicker transition, even if it distorts the free market? Okay, so we've got 3 yeses and a no. So Christian, why no?
Well, I think if the government can take a long-term view, then yes, similar to what China has done. But the reality is that in most countries, governments cannot take those 20-year visions, in which case then it leads to a lot of distortion.
Okay. Second one, so is it more effective to focus on scaling current technologies, or should we be investing in breakthrough for decarbonization?
And which one is yes?
Yes. Oh, I guess it's not a yes, no, but which one or two? Which one?
Breakthrough.
Breakthrough. Okay, so you two. What do you want to say? Jan?
Well, I believe there are some existing technologies in climate tech which are already effective, which are profitable, and which can be implemented on a larger scale. So I would first start with those.
Rajesh, the other side?
Well, the technologies aren't ready, except for solar, wind, and lithium batteries. You need fusion, you need geothermal. Those are the kind of things that are 24/7. If you don't invest in them, you're screwed.
Yeah. Is the current pace of institutional investments in decarb projects fast enough to meet global climate change? No. Again, you took yes. Okay, wow.
Yeah, well,
you're more bullish.
Yeah, no, there's over $150 billion that have been raised by impact funds. I think that if invested in the right businesses, those businesses should be able to scale. And we've seen there's been hundreds of millions of dollars that have been deployed, which unfortunately have failed.
Yeah, no, makes sense. Okay, so we're now going to do this in sort of 3 or 4 segments. I thought I would just break the panel down into a few sections, and I'm going to go just each one at a time. So we're going to first talk about founder readiness and fundability of companies. Which is what do investors look for and what do capital partners look for in companies. So Rajesh, first question to you. What's the most common mistake that you see deep tech founders making when pitching to you?
Being too long-winded, not getting to the point fast enough. So if your first 2 slides do not say why you're the best investment they should be making, what your cost is, what your IP differentiation is, just a couple of bullets, and if you don't get the attention in the first 2 minutes or so, it's unfortunately VCs have a attention span that's like terrible. So most of the times I see founders spending a lot of time building the case, market, and everything else that the VCs would have seen many times. So just hurts your case if it's too long-winded.
Yeah, makes sense. Andreas, what advice would you give founders that are navigating financing timelines that are taking forever now in climate infrastructure?
Well, it's in the title, demonstrate milestones. I think you need to be very clear about what your immediate next milestone is. That needs to be in a short time frame. You need to break down the elephant into small edible chunks, and then you need to demonstrate consistently that you can perform and hit those milestones.
Yeah, makes sense. Jan, why should a founder take venture debt?
Well, I think definitely venture debt can be a very good complement to equity to optimize the capital structure.
Okay, that's good. Short, thank you. He listened to my instructions. I wanted everybody to be very short on their answers. And Christian, what's the one gap do you see consistently in impact tech founders presenting their business models?
Business plans, overhyped business plans, and business plans that could potentially not be delivered.
Okay, good. Okay, so that was first section, just in terms of founder readiness. So we're going to do segment 2, which is what milestones will unlock capital. And so, Rajesh, going back to you again, what key milestones do you think a deep tech startup has to have to turn it into a viable investment for Khosla?
For us, the biggest one is whatever is a milestone that's tied to the techno-economics. We never do cash-on-cash IRR analysis on our companies. Where we focus on the pre-seed and seed is really techno-economics. So to the extent you can tie the milestones to the top 3-5 variables in your techno-economics and de-risk to the maximum extent you can, even at the pre-seed and seed level, that makes a big difference to us.
Got it. Jan, what would tip a company into a venture debt, yes or no, in terms of milestones?
Well, I think financial metrics are key. So revenues, revenue growth, runway.
Got it. Good. And Christian, what signals do you guys need to see before you commit to early stage capital?
Well, it depends. The answer would have been different 2 years or even a year ago. I think the focus today is very much on profitability. That's where the market is heading, and I appreciate not all companies are there, but that's where we're being pushed towards.
Well, but if you look at deep tech, hard tech companies, nobody is anywhere close to profitability, right? Which means you cannot deploy money anywhere.
Exactly.
So it's a question of you're really looking at hard tech, deep tech, material science, problems that are going to save the world. It cannot be profitability because we started very late, just in the last 3-4 years, and it's going to take a lot more time to get to that point.
And then it gets to the point, is it revenue? Well, there's no revenue. Is it offtake agreement? There's no offtake agreement.
Mostly there are no revenues.
Yes. So it's about the milestones.
It's about the milestones. It's about the economics, whether you have a scalable plan with minimal cash to get through, and de-risk these technologies.
Yes.
Otherwise, we will be in a self-fulfilling prophecy and never be able to fund these climate companies.
Yeah.
You have a deep tech startup, Andreas. How do you think about the milestones that you had to use to de-risk and get capital? You've raised $1 billion now.
So the tricky thing is, deep tech typically needs a long time and a large capital investment to get to profitability, and you need to be clear about how you're going to hit that profitability. But I propose you also do it in sequence, because to get to that scale, you need to scale the market, you need to scale the tech, and you need to scale your operational capability as a company. And it's better to do that in stages. So you reduce risk for your investors, and you can also prove again that you're one step closer.
Yeah, makes sense. All right, so we're going to try to go to the next section. So we're going to move pretty fast through all of these things. Okay, so strategies on de-risking and figuring out the right sort of ways to raise capital in a very policy-sensitive environment as we are in right now. Maybe I'll ask you the first question, Andreas, this time, which is, how did you address investor concerns when you went out to raise capital, especially for DAC, which was a concept that was somewhat new, and you guys were pioneers in the space?
Right. I think it goes a little bit back to the early answer. Do deploy in the field. Do deploy in the field as quickly as possible, because that's the real proof point. But deploy at a scale where you can digest and you can scale the offtake and operational capability at the same time, and get some third-party verification on the de-risking step. And then that makes it a lot more digestible to move step by step.
What was the biggest investor concern that you had when you were raising maybe your earlier stage of capital, Series A or Series B?
How fast this can turn into profitability, and can you actually develop the market in line with your growth plans?
Yeah, makes sense. And Rajesh, how do you evaluate and mitigate technical risk when you're investing in multiple funds? Maybe you can take a minute to just talk through the different funds that Khosla has and how you sort of manage that risk.
Sure, happy to. So the total fund size that we raise every two and a half years is about $3 billion. We raised that January last year.
It feels like 2.5 hours, by the way, in terms of how fast they raise capital.
So within the $3.1 billion fund, we have a $500 million seed fund, so we can write $2 to $10 million checks. We have a $1.6 billion main fund, so we can write $10 to $30 million checks. Then we have a later stage fund, it's a $1 billion fund, so we can write 50 to 75. So the idea is to really invest early and continue to support these companies over a longer period of time. So in climate, you can't just be passionate, you have to be patient capital as well. But you don't put good money after bad money, but you have the principles on how do you think about first of a kind, what needs to be de-risked, back calculate and say, what risk do you need to mitigate. The strategy is different for every company. Instead of giving a high level answer, maybe I'll give you very specific 2 or 3 quick examples.
That'd be great.
Fast pace.
That's okay, take your time.
Nuclear fusion. 2018, 2019, when we invested in Commonwealth Fusion, there was not a single company that was investable. Nobody was investing in the space. So everybody felt like it was a very, very high risk. But it was too important of a problem not to take a risk. But the way we looked at it is, yes, we knew this is going to take hundreds of millions of dollars, billions of dollars, and so on to get to the commercialization. And they've been very much on track in terms of the risk they outlined. But the way we looked at it is, for the minimal thing, what is the minimal thing they need to de-risk, and what capital is needed? And if nuclear fusion never ever happens, is there a beachhead market? Is there a different market where this can be wildly successful so the investors can feel comfortable and get the money back? Guess what? They were focused on the 20 Tesla. We looked at 17 different risks, and the biggest one was that getting the high Tesla magnet, because that reduces the size of the system by 1/4, like a whole bunch of advantages. And then we looked at it and said, even if fusion never happens, there is a magnet market for medical imaging, right? So that's a big enough market. So that got a lot of people around the comfort level saying, it's worth going after it. There's a worst case scenario that we can all do. Completely different example on a fusion, only other fusion company we invested in, a company called Rialta Fusion. So they took the decision of not going and building their own magnets. So we partnered with CFS on getting the magnet, but they de-risked everything so well that by the time they got the magnet from CFS, they were able to get to plasma in exactly 14 days. That's a huge accomplishment. And the rate of, they're actually working with AWS on the AI front to actually iterate very, very fast, like 100 experiments a day, kind of to get to the plasma stability, which is a significant de-risking factor. So every company is different, but we really try to think through, like, what do you de-risk from a capital stack perspective? What do you de-risk from a milestone perspective? So it's an investable company at every point, not throw money at the problem.
Yeah, no, thank you. It's really helpful for I think folks to hear from people that have been investing for the last 20 years and have gone through the cycles and have the ability to evaluate the technical risk.
Totally.
And so
we failed a lot. We learned a lot of lessons. We'll still make mistakes, but not the same mistakes.
That's right. Yeah. Institutional knowledge, not replaceable by AI, I think, not yet. Jan, just a question for you. How do you view risk differently than VCs do in terms of how you're evaluating startups? And maybe you can talk a little bit about what stage is sort of appropriate for somebody to come talk to you versus a classic VC type model.
Yeah, of course. So clearly there's a big difference that VCs are focused on the upside, while banks are focused on the ability of the project or of the company to repay during the life of the loan, either from raising new capital, new financing, or from internal cash flow generation. So banks will be focused partly on financial flexibility, on the flexibility of the team and of the project to adjust their operations to make sure they can generate cash flow needed, or their ability to raise capital.
That's helpful. And Christian, question for you. What's the post-investment risk that you're most cautious about investing when you're investing in out of your fund?
You know, I think regulation change is a big one, especially in today's environment, and then just business plan being deliverable.
And do you take technical risk in your investments, or do you not take technical risk?
No, we do not. Remember, as an investment bank, we're a broker.
Yeah.
So we bring in the investors to the companies. We do face reputational risk.
Right. Yeah, that makes sense. All right, so the next segment, we're going to just talk about market signals and financing strategies, just views from all of you on the topic. Maybe we'll start with you, Christian. What does the market look? I mean, like, I think the big question and the big expectation in 2025 was that there's going to be a big IPO market, lots of exits in this environment, except I think the last 5 days have changed all that for now. So I'm just curious to get your thoughts on what the appetite looks for M&A from large sort of corporates, and then also potential IPOs in the market today.
Yeah, so as you said, the last week has created a lot of uncertainty. It's a shame because we were starting to see a lot of positive signs. There were a lot of companies starting to prepare for those IPOs. A lot of companies, their share prices had been going up. They had been accumulating a lot of cash, so they were starting to become front-footed in terms of M&A. That has come a bit to a pause, but what I would say, what's interesting is that at least in the processes that we're running, our clients are telling us, don't stop. Let's continue to aim for the summer window or the post-summer window, because it's just too early to tell. It's very possible that in a month we'll come back to where we were a month ago. And I think that the general tone is still hoping that the second half will be better.
And my guess is that, this changes going back to the topic itself. If there's no M&As and if there's no, IPOs, which then you're going to need a lot more growth capital. Any sort of views on advising founders to think about how to manage this, break in potential M&A and potential IPO delays, to managing how they go back and maybe raise that one more round of capital before they can be public ready?
Be prepared. You need to do the extra work. You need to be prepared, because you just never know when the will open. And the reality is that it's been 2 tough years for all of us. 23 and 24 weren't easy years, and people are hungry. People want to deploy money. So the moment that things open up, people will deploy.
Yeah, makes sense. Jan, just a question for you. Are there specific sort of regions or sectors that you feel like are much more sort of debt ready than maybe early stage climate tech founders?
Well, I would say in general, Europe, US is very ready. They have a deep, they have a financial system that is able to finance this type of projects. And what we've noticed, at least from the beginning of the year, there's much more optimism. There's much more. There's additional equity rounds. I believe there's a lot of equity on the sidelines to invest in projects, and I see much more positivism. So it's true that the last few weeks have broken that cycle and have created a lot of uncertainty. But I'm also very positive and expect that this will be a very good year. And after the difficult years that we had, that we'll see continued improvement.
Got it. And then specific sort of sectors within decarbonization that you think are more debt ready?
For debt, it's basically the ones that are a little bit more mature and a little bit closer to profitability, and they have a clear use case.
And how do you describe maturity for a deep tech startup?
If it's deep tech without still a very long timeline to get to profitability, then that's very difficult to finance for on the debt side. So there needs to be a horizon of say 3-4 years where you get to that point.
Short answer is you may want to go to EIB before you go to BBVA.
I think EIB is clearly a public, a semi-public entity,
Yeah.
and so they may be a little bit more flexible.
Yeah, no,
with
makes
these
sense.
very long-term, long-dated
Right.
deep tech
Yeah.
projects.
Rajesh, just a question for you. Where are you seeing most momentum right now in terms of capital inflows in the decarbonization space?
Yeah, two sectors we've been investing for a while. Nuclear and geothermal are certainly getting a lot of traction because they're the only 24/7 baseload power. So all the data center companies really look for energy security in the long run. Plus, so happens that's one of the few sectors that the current new Trump administration is also supportive of. So that certainly helps. But if you look at a lot of other sectors like cement and steel, there still need to be innovation happening there. Decarbonization has to happen. Those are huge consumption. That's where Europe has a great opportunity to shine in some of those sectors. Or even green hydrogen, where there is a lot of skepticism. But if you get to the right cost point of less than $2 per kilogram, which we have a company in Verdagy, and they just announced a 0.5 gigawatt electrolyzer. So things like that are getting a lot of traction.
Yeah, it seems like energy resilience, energy security, those are going to be key topics, whichever side you are of the Atlantic. And I think that's sort of at least where we're seeing most of the capital inflows on our side. Andreas, just a quick question for you. What role did government incentives play in financing strategy for Climeworks?
I think they're important for us to decide where to deploy. Right? We have a technology that's proven and that works, and we sort of have to choose where is the best place on the planet to do it. And there's always a trade-off between energy, the location, how fast you can build, and what type of government incentives you have. So definitely government incentives and well-structured government programs that are both on the taking a bit of risk, so investing into the capital stack, being part of the capital stack, as well as lowering the entry point for consumers to buy the product when it's still at a price premium. So if you can have a combination of both, that's the ideal setup. That's been important to us.
And have you had government support so far in Climeworks?
The existing projects have been built without government support, but for the new locations that we're considering, in several places we have been awarded or are part of the process of being awarded government support.
That's great. Fantastic. All right, so the last segment, and before we get to our lightning round, is, you've all been in the trenches for a long time and have learned lots of different lessons. So we're just going to cover, lessons learned from the frontier, or the front lines. So Rajesh, question for you. Looking back, has there been like one obvious or non-obvious trait or metric that turned out to be a key predictor of success for a startup that you invested in?
I think for us, the biggest one has been team. Maybe an obvious, non-obvious, but that's the single biggest success factor for us in terms of how diverse the team is, particularly when we picked the senior management leadership, not specifically from an industry. That led to more success for the simple reason. I'll give you one example, and I use it literally every week, every month when I think about other things. Well, I mentioned about this company called Verdagy. We spun out of another entity and put $3 million check to de-risk a lot of high current density, voltage, all of that stuff, again, to just emphasize on the key techno-economics. Once the technology team found that they've hit all the benchmarks, we wanted to hire a commercial CEO because this was a hardcore technical team. My single biggest metric was do not hire anybody from the hydrogen industry as a CEO, for the simple reason that nobody in the hydrogen industry has scaled anything. They wouldn't know how to build a plant, they wouldn't know how to commercialize, they wouldn't know how to go to a customer. So we hired a CEO. He was the chief operating officer of SunPower. He was ex-VP of Flextronics, Electronics. He had done contract manufacturing. He had done. So that's a big predictor of the success. We hired a VP of engineering who had done advanced manufacturing, the Gigafactory in Tesla, and that made a big difference. They built the Gigafactory in 3 months. Right? Those are the biggest variables for us, and we continue to see that as the biggest lever in terms of the team that you build as a company you build.
And any companies that have defied logic when you funded and you thought, it's going to go okay, and then it ended up being great?
There are examples on both sides. In the interest of time, I'll leave it.
Okay, all right. You don't want to name names. I get it. Andreas, question for you. Any lessons as you've sort of scaled from pilot to industrial deployment? Was there a financing decision that you took, that you in hindsight would have changed in terms of how you raise capital?
Maybe not something I would have changed, but I think one thing that gets underestimated are your unknown unknowns. Well, what are the things you don't know when you deploy and that only get proven once you deploy in the field? Make sure you deploy early so you can discover those and leave some wiggle room for that. And one key mistake that I wouldn't make is, and we have seen that happen in another example in Europe, is don't introduce debt too early to grow quickly before you actually know that everything works and that you understand the ramp-up curve that you have in your projects. And don't be scared of dilution. These are, deep tech is capital intensive, and you're gonna need that capital, and you're gonna need some flexibility in that capital until you're at the point where you can introduce that.
Yeah, so I'm gonna key in on one of the points that you said, which is don't take on debt too early, and ask Jan the question, have you seen companies fail recently or in your portfolio because the capital structure was screwed up because of debt?
Yeah, no, that's a great question. So I fully agree with your point that that I think one of my misconceptions is I expect the adoption of climate tech and the implementation and adoption to be much quicker. But I think you need to have a very long horizon and be prepared for cycles along the way. On companies that fail, I think it's very rare, or at least I have not seen examples of companies that fail purely due to the financial structure. Because lenders, banks, or funds would always, as long as the business is viable, as long as they would always look for a solution. Now, I do think on the financial side, so for example, probably Silicon Valley Bank could be an example of a company that failed because of a funding situation, of the way they manage their balance sheet. But on the corporate side or for projects, I think it's quite rare.
Yeah, makes sense. And then Christian, a deal or a founder story that that stands as a turning point for you in terms of how decarbonization is working and how the capital sort of is coming together for these startups.
For me, what's funny is that it's not necessarily the success stories that have shaped me the most. It's more the companies that have struggled or failed. And within the impact tech world that I cover, I spend a lot of time in agri-food tech. So I've seen Impossible Foods, I've seen Beyond Meat, I've seen Insect, I've seen InFarm, I've seen Northvolt. And it's just, we have learnings from every one of them, which I think will only help the industry. And I've learned the most from those.
Got it. Awesome. All right, so we're going to jump into some lightning questions, and I'll have a few of you answer these questions, not everyone. So the first one is, maybe I'll start with Rajesh. What's the top founder trait that you would back?
The ability to learn fast, iterate fast, fail fast, and continue to. The speed is the biggest trait I've seen.
Christian?
To dream big and to surround yourself of capable people.
And Jan?
Have a lot of energy, have tenacity to build your company along a long period of time. And
do you think your CEO meets that criteria?
Yeah, I think he does. I'm going to add one more thing, and that's focus, especially in the growth stage. Typically, so many opportunities at that stage, and it's very important to stay disciplined and focus on the key because there's too many things you can be doing.
Yeah, awesome. Okay, solo founder or founding team? Any thoughts?
I think if you have a good founding team where the founders complement each other, I think that's the winning formula.
Rajesh?
Like a good, strong founding team, but you've had success in both.
Okay. What's the first milestone that you think signals fundability for a company? Jan?
Traction in revenues and a path to profitability.
Rajesh, and then Christian?
Whether they're doing the highest impact as the first filter. If you're doing the highest impact, do you have the most differentiated technology that can get to the cost metric? Those are the two filters. You can help build the right team around that.
And Christian?
Again, I said before, it used to be revenue, now it's profitability, but I appreciate now all companies are there.
Yeah, makes sense. Okay, what's most important in traction? Is it revenue, pilots, or partnerships? You already said revenue. What do you think?
Pilot.
Okay, Rajesh?
Pilots.
Revenue.
Okay. What's the biggest risk factor today in the environment?
Volatility, market volatility.
What about US versus Europe?
In terms of,
The risk that companies take in either going, if they're in the US, going to Europe, or if they're in Europe, going to the US markets?
so what's interesting is when it comes to climate tech, Europe is very well respected. So whenever I go to the United States to talk to US investors, people want to hear about what's happening in Europe. If you go to the US to talk about software, they don't care about Europe because software is where US dominates.
Yep.
So I think US versus Europe, of course, the US will always be the biggest market, but Europe is very well respected.
What's the most overhyped climate tech sector today? I'll start with Jan, and then we'll go that way.
Well, a very specific niche I like is heat.
No, overhyped.
Oh, overhyped. I'm sorry. I believe that ESG measurement and reporting, I think there's so many startups in that scale that it's too crowded.
Yeah. Andreas?
E-fuels.
Okay.
DAC was overhyped, but that happens for every sector. That happens for every sector, and the good companies come through it. Solar was overhyped. That's why you had 200 solar companies at one point. Only a few survived, and that's all you need for the market to be successful.
I agree. Everything comes in cycles, and everyone has a role to play. So I wouldn't say there's one in particular I would call out.
Okay, we'll start with you now. Equity, debt, or M&A in 2025?
None of it.
Dead year?
Hopefully not. Hopefully not. If things turn around, M&A and equity.
Rajesh?
This is a 10, 20-year cycle, like anything in climate tech. So the old companies that we invested 10, 15 years ago are going through the debt and potential IPO, but a lot of seed stage, early stage companies will be going through an equity. This is the right time to invest. When it's not overflowed with capital, when there are good companies, when people committed to climate are coming and forming companies, this is the right time to invest in climate. So I'm super optimistic.
Andreas?
Equity. And I wanted to say, look, the risk is follow the hype. Don't follow the hype curve, especially in this volatile environment. Deep tech has the advantage that you solve a problem that is there and for which there is a market, and there's a gigantic market. And so you can invest long term, and that's the right thing to do in the current volatile environment.
Yeah, you're forming trillion-dollar companies, so you have to have that conviction to do it.
And Jan?
I also believe equity. I think there's a lot of money on the sidelines focused on this segment. And then debt, secondary, but more to complement for more mature projects.
What's the investor red flag to avoid for startups?
Sorry, what was the question?
What's the investor red flag to avoid for startups? Like, what do you not like about startups? Oh, sorry, about investors that startups should avoid?
I would say, investors who jump in very fast into climate tech also have a tendency to jump out. So if you have to pick between credible, committed investors over a long period of time, even if it's lower raise, lower valuation, stick to that. That will help in the long run.
I think Andreas should have a view on this.
Yeah, short-term exit expectations.
What's a buzzword you guys would like to see retired from pitch decks?
One of a kind, unique.
I certainly want green premium discussion go away. You can hang on to green premium for a short while, but it's so much fluctuating. Instead, focus on cost.
Jan?
AI, unless the business is focused on that.
Yeah, makes sense. So I have just a funny question. If you could have one superpower to accelerate climate tech process, what would it be?
For me, it would be bringing people together. No, we're all here for one reason, and I think that if we were able to bring everyone together, we would have a much bigger impact.
More regulatory certainty geographically, globally, for sure. That's wild swing is what affecting it. As much as people complain about China, the thing is they put a 10, 20-year plan, stick to it. That's why they've been generating solar, batteries, they're getting all the power, whereas US and Europe are completely getting left out. So many technology innovations come out of Europe and US, but they don't see the market. It goes to China at some point. On the global scale, it's all okay. Somebody has to make it. Eventually, if somebody solves the climate problem, it's great. But that's one superpower I would love to have. Certainty and commitment long-term between the European governments, between the US, to make sure we can stick to climate.
Jan?
No, I fully agree with that view.
Andreas?
Time manipulation.
Time manipulation.
I'd love a
Amazing.
48-hour day.
I want a shorter day. Okay, so, if you had to partner with a historical figure on a decarbonization project, who would you partner with?
Yeah, I would actually choose Kramer of Seinfeld, one of my favorite shows, and he had some brilliant business ideas.
Okay. You, Andreas?
I'd like Obama to do my customer pitches.
Amazing.
Probably somebody like a Winston Churchill or FDR. People, the mission, the speed with which shipbuilding and so many things happen in just over a period of 2 to 3 years in the US or Europe is phenomenal. That's the pace and scale climate needs to move in.
Awesome.
We talked about, you talked about how, as you were thinking of scaling a business, you pick someone with the experience of bringing a business to true scale. And if I think about previous entrepreneurs, like someone like a Steve Jobs that took an idea to create Apple, which is now a product that is loved by everyone in the world, I think we need those type of entrepreneurs in the climate world who can make climate a live thing.
Amazing. Couple more quick questions, and then we'll open up to the audience. If you could travel anywhere in the world to learn about decarbonization, where would you go?
I wish there was a San Francisco in Europe. I think it's important for Europe to create this hub where entrepreneurs can go to, because the US definitely has it.
I think a lot of technical talent for sure is there in US and Europe. I would go to China. They are the ones who are scaling up, moving fast, getting things done.
I was going to also say China.
And Jan?
Yeah, same here. I would love to go to China to see their adoption of electric cars,
Okay.
which is
Important
impressive.
announcement, ETS is in China next year, not here. And then just the last, fun question and final piece of advice for founders in the audience. What would you tell them if they're raising money this year in 2025? Christian, you want to start?
Yeah, as I said before, be prepared. The markets could turn in any minute, and you just need to be prepared.
Round out your team in terms of adding a lot more credibility for being able to scale up and focus on costs. Not operational costs, but the ability to scale up the net system cost, net product cost. The SAF things will come and go, $1 per gallon, being priced by aviation industry for $10 per gallon. I don't think that's realistic. So if each of these industries don't go with what the market is signaling to you today, go with what the economics need to be 3, 5, 7 years from now.
Awesome. Andreas?
What you always need as a founder, persistence.
Say that again?
Persistence.
Persistence, yeah.
Yeah, and be able to present your metrics, your economics in a very, very clear way, and have the data to back that up.
Awesome, fantastic. Well, we've got about a minute or so. If there's any questions, happy to take them. If not, we'll get you guys go to lunch. No questions? Going once, twice? Okay, we're good. Thanks, everyone.
Thank
Really
you.
appreciate you being here. Thanks, guys.